Warning: the following video may contain inaccuracies, as it is done by a group of students for a holiday assignment, and because they are shy, they had a program to narrate the video. Please bear with this video. Haha. What happens to Singapore when the US dollar depreciates? In this video, we will be analyzing both positive and negative impacts of a depreciating US dollar on Singapore's economy. Let's begin with the simple concept of aggregate demand. Aggregate demand, AD, is made up of domestic consumption, domestic investments, government spending, and net exports. 2008, the US currency is showing strong dollar demand. In April that year, the yield stayed in a range of 3.91%, 4.23%, indicating a stable dollar demand. During 2009, the dollar fell as the yield rose, but the dollar fell 20% to debt fear soon after. This was when the other countries sensed that the US currency is weakening. Finally, in 2010, the dollar weakened. The yield went down for fears of inflation. The devaluation of the US currency have created various effects on different countries, depending on the nature of their economy and their governmental policies. Due to the importance of the US currency as on other countries, we will be taking a closer look at Singapore, which has been affected greatly by the depreciation of the US dollar. Now, let us start off with some of the positive impacts of a depreciating US dollar. The devaluation of the US currency has led to an increase in imported American goods by Singapore from 11.8% in 2008 to 14.7% in 2009. Singapore's currency appears to be stronger against the US dollar, making imports from America to be cheaper. Hence, Singaporeans would spend more money on imports, causing a decrease in net exports. However, this will increase domestic consumption as there is a wider range of goods and services. This will also increase aggregate demand as Singapore is heavily reliant on imported goods and services. Government spending will also be boosted as the Singapore government can import more military equipment from America, since it is relatively cheaper, as Singapore currency is currently worth more. This would lead to more stability and security for the citizens of Singapore. Overseas investors would also be more willing to invest in Singapore, increasing domestic investments, raising aggregate demand. Foreign investors would be less willing to invest in the US due to better economic prospects in Singapore. Hence, Singapore will have more funds, creating better prospects for potential investors. Labor productivity would increase and more capital can be channeled to hire more labor, expanding into further areas of development to expand the market. More funds can also be diverted for the building of more infrastructures for the economy, resulting in an increase in government spending, which is part of aggregate demand. Furthermore, local jobs will increase due to an increase in overseas investments. Jobs in the military and defense-related sectors will boost as well, creating more jobs. This will result in an increase in aggregate demand. Due to the devaluation of the US currency, imports from Singapore have fallen by 11.5%, depreciating the Singapore dollar. Singapore exports seem to be cheaper now, leading to a rise in business expectations. This would increase the aggregate demand, as investments will increase due to positive business expectations. Singapore businesses can venture into the domestic market of America, selling their goods to the large market of 307,006,550 people. With the vast amount of people living in America, the revenue earned would be substantial. The gross national product of Singapore would increase as Singapore businesses in America repatriate the profits earned back to Singapore. This increase in GDP would result in potential growth for Singapore, as funds would be available for the Singapore government to invest in research and development for Singapore. Singapore has a progressive tax system. Hence, high-income earners would be taxed more, while subsidies and grants would be given to the low-income earners, narrowing the income gap. Standard of living is defined as a level of material comfort, in terms of goods and services, available to someone, or a group of people. The non-material aspect of standard of living would also increase as well. In the past, it has been unaffordable for many to travel to the United States of America. However, with the depreciation of the US dollars, many families would then be able to enjoy the favorable exchange rate. This would encourage many families to make full use of this opportunity to travel overseas, resulting in the increase of standard of living. On the other hand, as the price for imports would generally decrease, Singaporeans are able to take the chance to shop online for US items and further increase their comfort level, as there are a wider range of goods to choose from. With the increase in domestic investment and domestic consumption, this will spark a boom in Singapore's economy and would result in either a rise in pay or more bonuses for the employees. This would then increase their material standard of living. Let us now move on to the negative impacts of a depreciating US dollar. Singapore, being an extremely open economy, is also heavily reliant on trade. With the devaluation of the US currency and the appreciation of the Singapore dollar, many countries will turn to import their goods from the US instead of Singapore. This will lead to a decline in Singapore's net exports, causing a drop in the aggregate demand as well. Singapore has been the 10th largest export market for the United States of America in the first 9 months of 2010. When the US currency depreciates, America would decrease their imports from Singapore, as Singapore goods would seem dearer than before. This means Singapore's exports would decrease, causing AD to decrease. In other words, Singapore would lose a sizable amount of revenue. Furthermore, tourists from America would be reduced as it is comparatively more expensive to travel overseas now due to depreciation in the US currency. Hence, this would affect Singapore's tourism industry. However, the percentage of tourists from the US coming into Singapore is very minimal. Therefore, this may not make a significant impact on the Singapore economy. With the depreciation of the US dollars, Singapore imported $27.9 billion worth of US goods and exported only $15.9 billion worth of goods to the USA in 2010. This resulted in a trade deficit. This is in fact unhealthy for the Singapore economy. In the long run, when and if the Singapore economy experiences a recession, there would not be any spare amount of money in the capital account to bail the Singapore economy out. However, due to the fact that the Singapore's economy has been experiencing budget surplus for the last 10 years, a slight budget deficit would not put the Singapore economy into dire straits. In conclusion, the weakening of the US dollar can affect the Singapore economy in many ways. However, the extent to how much the weakening of the US dollar affecting the Singapore economy depends on a few factors. Many countries that are involved in international trade, for example China, the refusal to appreciate its currency gave her an unfair advantage over every other country, making it cheaper to import China goods. This will result in a loss of exports for Singapore, affecting our trade balance. Next, as the Singapore dollar is appreciating and the American dollar is depreciating, hot money may flow into Singapore to take advantage of this situation. This is a major issue, as people will take advantage of the appreciation of the Singapore dollar, and apart from that, funds will not be under full control as hot monies are very volatile and are susceptible to slight changes. To end it off, the positive and negative effects on the Singapore economy varies. Singapore relies very much on trade and tourism, therefore will be affected by a depreciation of major currencies such as the US dollar and the British pound. However, as Singapore is using a managed float exchange rate system, this may not affect the Singapore economy as much as what other economies are experiencing.